Hi all, welcome to Navia Markets Ltd. Our latest offering is again from the auto component space, that is sonakoyo steering systems Ltd. If you see, our previous big auto line industries has outperformed the whole auto pack as well as the markets with a superior, performance. And then we have come up with Supros, and now we are coming with sonakoyo. The reason we are sticking to the auto component space is we believe that there is still a lot of steam that is left in this auto component space. If you see, the reason being a huge demand that is existent in the auto space, which is very much reflected in the auto sales numbers that were being posted by Maruti, Bajaj, Hero Honda, Mahindra. They have been posting record sales over the past few months, and this is expected to go. I mean, this kind of huge demand and record sales are expected to sustain at least for the next 2-3 years going forward. So, and one more important point is not just the huge auto demand, but there is huge shortage for the auto components. And because of this huge shortage, these auto players were facing very lot of difficulties, and their production time has been increasing. Lead time has been increasing. Production is getting delayed. So what it means, that there is a huge shortage of the auto components, and it's huge opportunity for these auto component players to expand their capacities and increase their volumes going forward, which means a strong growth in top lines for the auto component players. So considering such a shortage, what we found is that steering systems is one such component which is facing shortage in the markets. And the market leader of the steering systems is Sonakoyo Steering Systems Limited. So, and this is the one of the rationale behind which behind picking this particular stock. If you see the credentials of the company, it is the largest manufacturer of steering systems for the passenger car and utility vehicle market in India. It is almost having a market leadership of near to 41%. And if you see, the main customers of the company are Maruti, Hyundai, Tata Motors, and Mahindra, and they have been recording great sales in the past few months, and they're expected to do good in the coming quarters and years. So this means a strong top line for the company going forward. And one more important point is there is a capacity constraint of its sub-supplies, which has hampered its volumes in the past quarter. If you see the past quarter results, that is visible. And what the company is doing now is it is concentrating more on this, improving the capacity of the sub-suppliers and working with them to remove the bottlenecks in the sub-supply chain. And what this would mean is that the volumes would get increased significantly going forward because of this removing of the bottlenecks, and that would mean a very good top line for the company. And it's not just about the volumes. If you see, the company is very much concentrating on the improving internal efficiencies. That means improving the productivity, operating margins of the company. And this it is it has been doing for the past 2 years, and it is very much concentrating on this particular area. And if you see, the improvement can be very much seen. Where it could reduce its dependency on import materials from 36% to 33%, and this has been done due to increased localization of parts. Which it could reduce. Because it could reduce its cost, and again it would increase its operating margin actually. So this is because of its high and increased focus on improving its productivity and operating margins. Not only that, if you see, it has also been concentrating on increasing dual sourcing of its components, and also increased focus on its vendor development, and what is doing all these things to improve the internal efficiencies. That is a very positive factor, because as we said earlier, its top line is assured because of the huge shortage in demand. Now, if it could concentrate on this kind of productivity improvement, that means it could also increase profitability, and net profit could increase at a higher rate than sales. So in both ways, it's going to benefit top line and bottom line. So considering all these kind of positive factors only, we have picked this stock, and considering all this, what we feel is Sonakoyo Steering is best placed to capitalize on the opportunity of shortage in the auto components, and the huge demand in the auto component space. So this is the best pick among the remaining stocks. It is also increasing its capacity utilization steadily, and if you see, past quarter, the capacity utilization is 70% compared to the same quarter last year. I mean, it was 55% in the same quarter last year, and now it is 70%. That's a very good improvement in its capacity utilization, and this kind of capacity improvement in capacity utilization is expected to, continue going forward. Even if it has strong focus on research, if you see, it has got an international patent for torque sensor for electrical power systems that shows its focus on research. So having said all the positive factors for the company, if you see at the valuations also, it is trading at 14.6 times its trailing 12-month EPS and 12.6 times the FY 2010-11 EPS. Even though these valuations look a little expensive compared to Sucrose and our previous pieces, auto industries, but still then these valuations are attractive. Because as I said previously, the growth prospects are very robust, and considering all that, these valuations are really attractive, and so we recommend buy in this counter with a long term perspective with a target of 24.3, that is 25% return in an 8 to 10 month duration. And these are the financials of the company. As I said, the PE is 14.6 and 12.6. And one more thing is the risk involved in this investment is that if any steep rise in commodity prices like that of steel happens in future, that may affect the profitability of the company. So we should look forward. I mean, we should be very careful at any steep rise in commodity prices. So excluding that, there are a lot of positive factors that that could really lead to huge appreciation in the stock price. So considering all the positive factors, we recommend you to buy this counter with a long-term perspective with a 25% return target. Thank you all.